profitable forex trader, it is very, very important that you know how to use time frame for your best interest. And this is one of the questions I've been receiving up and down. What is the best time frame for trading? And in this particular video, I'm going to answer that question. So now when it comes to using time frame, all the time frames work, but it depends on the time that you have and the personality behind the chart. That's it. It depends who is trading. So each time frame works differently. Now these are the advantage of time frame. If you're using a bigger time frame, you're going to escape the noise. You're not going to see what is happening. Most of the liquidity you are not going to see. If you're using a smaller time frame, you're going to have opportunity to enter the trade like more frequently, but it is also risky. So let's look at a few things you need to consider. We have the 1 minute time frame, we have the 15 minutes, we have the 5 minutes, we have the 30 minutes, the 1 hour, the 4 hours, the daily, the weekly, and so on. So all of this time frame varies. Their strengths are different. But as a newbie trader, there's things you're looking for. One of the things you're looking for is flexibility. 1 minute, 5 minutes, 15 minutes lack flexibility. Now when I talk about flexibility, I'm talking about the opportunity of you entering trade and you can go do something else for yourself. You can be doing other things. You can come back and check your chart. It's hard because these are charts that closes in minutes. They close very fast. Do you understand? But when it's come to 4 hours, you can wait for the trade to come down to your entry point, and when you enter the trade, put your stop loss, put your take profit, you can allow the trade to run. So as a new trader, I recommend you go for that. That's the first thing. Now another thing that makes me to recommend these 4 hours for new traders is the cost of trading. The cost you're paying to enter a trade. You know, if you're a scalper, if you're trading a small time frame, after you'll be entering multiple trade at the same time. That's just the truth. Since you're entering multiple trade at the same time, you're being charged spread every time you're entering a trade. Every time you're entering a trade, because you're entering a trade off and on. That is the advantage of it. So I'll personally advise a newbie traders to go for a 4 hours time frame as you're learning. Another thing is easy to enter the trade. You see, it is very easy for you to trade a 4 hours time frame than other time frame. Do you know why? Because there's a high liquidity in smaller time frame than it is in 4 hours. 4 hours time frame happen to be the most accurate time frame as far as trading is concerned. The most accurate time frame. So as far as I'm concerned, from my own end, I recommend you start with 4 hours time frame and learn. You can also exploit other time frame. As time is going on, you can use other time frame if you have enough time. By the way, other time frame is for people that really have time to sit down and monitor the chart. As far as what I teach my students is that it is important that you should have other things you're doing so that you can also make profit. And the day that trading does not bring money, you're not killing yourself. For that reason, I recommend you going for 4 hours time frame for now. Do you get it? Go for 4 hours time frame for now, because you have easy entry access. It is flexible. The cost is low because it's just one order you're taking or few order you're taking. You're not taking order every second, every 5 minutes, or every 30 minutes. So go for 1 or go to 4 for 4 hours. Now when we talk about this, it is very important that you understand how this works. For pro traders, this is what we do. We use the 4 hours or the daily time frame to check direction. Now use the smaller time frame like 1 hour or 30 minutes to check the behavior of the trade, and use the least time frame like 5 minutes for entry points. That's what we can do. But you as a newbie trader, you might not be able to do that. So if you want to also use the way we use, it is quite simple. The 4 hours time frame is used for taking direction. Is it an uptrend? Is it a downtrend? Is the market ranging? We can easily see it on 4 hours or daily time frame. But when it comes to the entry in the trade, we like to use the smaller time frame. We check the smaller time frame. So we use the 4 hours time frame to mark, use the smaller time frame to set our activities, our zone, confirm the zone, confirm the entry point. We use our small time frame to execute the trade, because in the smaller time frame you can see liquidity, see everything that is happening. But as the newbie traders, I advise you to stick to the bigger time frame, which is 4 hours time frame. It will really help you reduce your stress, reduce the confusion you're going to experience, because you're going to escape the noise. In smaller time frame, noise are everywhere, but in the bigger time frame, those noise are compressed into one candle and you're not seeing it. If you got value from this video, please kindly like, subscribe, and turn on the notification bell so that the next time we drop a video, you'll be among those people that will get the update. And remember to watch this video that YouTube just recommended for you, because this is going to be one of the things that's going to help you to become a profitable forex trader. See you next time.